floor 6. Therefore, we will begin, and whoever will be joining us will join in as we go. So I'd like to welcome everybody this evening. Thanks for being here with us today. Thanks for taking time out of your busy schedule to come and be with us here today and attend the webinar. A special thanks to our speaker who agreed to speak at this event under last minute circumstances, and would like to be very grateful for understanding and be agreeing to be a part of this conversation today. I'd also like to welcome the ABSIP National for being with us today, as well as my colleagues from the ABSIP UWC chapter and others from other UWC chapters from other varsities, and each and everybody of you that is here with us today. Could I please get a sign of whether people can hear me or not before we continue? Because I'm very skeptical about whether...
we can hear you.
Okay, cool. All right, thank you very much. So I'll be sharing my screen as we start. Is it visible?
Not yet.
Can everyone see the screen?
Not yet.
Okay, hold up.
Wait, let me see. Yeah, now it's visible.
All right. Okay. So the first slide obviously is a welcome, and I believe I've done that. So many of you are wondering why we are all here today. Well, not really. Sorry for that. Technical difficulties. Apologies. I'll just be waiting for my screen. So anyway, a lot of us are wondering what ABSIP is, first of all. ABSIP is an association of Black securities and investment professionals. So, there we go. I hope you can see the screen now. It was established in 1955 to address the apparent lack of representation of Black professionals in the securities and investment industry. And so today, we are going to be talking about opportunities within the asset management industry. So what sparked this idea, or the topic, rather to say, is the fact that as students of each and every varsity, different varsities, we always wonder what it is that we're going to do when we leave school or during our various degrees. And so today, we invited Pravashan from Foord Asset Management to shed some light into the opportunities within the asset management industry as a whole, or different sectors. We'll be asking him questions as well, just to figure out what is actually happening, what it's about. And so that's what we'll be doing today. So basically, the idea came from an article that was read that was on different varsities and where most professionals come from, which varsities they come from. And it was saddening for the UWC students, well, for me in particularly, to see that most of them are from your UCTs, your Wits, your Stellenbosch. And so inviting Pravashan today, I just wanted to find out what it is that we can do or improve as students from previously disadvantaged universities to be able to hop into the asset management industry. So without further ado, I'll be handing over to Mr. Pravashan from Foord Asset Management. Thank you.
Thanks very much, Colafelo, and thanks to ABSIP UWC for the opportunity to present and engage with all of you. And thank you all for taking the time to join and for your interest as well. Obviously, it would be ideal if we could do this in person. You know, given the COVID circumstances, we make do with what we can. But I hope all of you are safe and sound as well. The mandate for us was to touch on the opportunities for youth in asset management, and it is important, if a bit of a dry topic. And we were also asked to talk a bit about the industry in general and about Foord and what we do. So I will be doing that, but I will try not to spend too much time on it because I think Q&A is quite important, and it would help in terms of getting to what's most relevant for you and what you really want to know. So let me share my screen as well, because we do have a presentation. Just get this back. Okay, share screen. Okay, so just to check, can everyone see the presentation?
Visually
Yes,
clear, yeah.
we can.
Okay, perfect. All right. Okay, so again, let me just go through it. Okay, so first to just do a brief introduction on Foord and the team. So that good-looking guy is me, Pravashan Murugesan. Just a bit of background very briefly. I studied at UCT, but I'm originally from Durban. I did my articles at KPMG, so I'm a qualified chartered accountant. I did my CFA while working at Investec, and as I joined Foord, and I finished my MBA from the University of Oxford's Said Business School in 2018. I don't want to spend too much time on myself, so I'm just going to move across. So this slightly less good-looking guy is my colleague Irfan. Irfan spent time at Future Growth and Prescient Securities. He's a chartered accountant and also has a CFA charter. And he'll be spending some time talking to you a bit about the industry as well. And he's here to help me with the Q&A. Okay, so most of you would be familiar with the names on this chart with the exception of us. We are actually one of the largest players in the South African market. We don't spend as much time in terms of brand building as perhaps we should. We prefer to focus on our investment returns and delivering value to our clients. But just to be aware that we are actually one of the major players in the South African market as well. Okay, so this is a bit about the background on Foord. You can read the comments on the slides. The idea is that Foord is really a premium asset management business who focus on providing services to long-term investors. We have a multi-decade track record where we focus on the consistency of delivering our returns. We take a very diversified approach. I'll touch a little bit on our investment philosophy going forward, but we are an owner-managed business which has been around for almost 40 years. And we have expanded offshore as well with offices in Singapore, which are quite closely integrated into the South African office as well. Again, I'm not going to spend too much time on it. This is the investment team. Top left is our founder, Dave Foord. Those highlighted in orange, those are our portfolio managers, and the rest of us are our analysts. Of course, I've recently been appointed as the head of equity, which is kind of a combination of the deputy CIO role, as Daryl will be retiring next year, and of course my analyst position as well. This is our Singapore team, quite a diverse team. I think it works quite well. We have people from Sri Lanka, China, Australia, and America as well. It brings a lot of different ideas and flavor to the team, and we learn from each other as well, which is quite valuable to get the different perspectives. I think this is an important slide just to touch on because it shows our performance over a period of time. So our balance fund is our flagship well, not our flagship fund, but it is one of our biggest funds. This is what a lot of people's retirement savings go into. And just to provide a little bit of perspective here, this chart is showing how Foord has compared to the benchmark, which is an inflation-linked benchmark. In essence, if you had invested 100,000 Rand with Foord in August of 2002, you'd have close to R1 million now, which is a 9 times increase in your money over that period. I mean, to put that into perspective, if you had invested your money in some type of fixed income, keeping it in your bank account or in a government bond or something like that, you'd get 6 to 8%. So over that period of 18 years, you'd probably have about 400,000 Rand, which means investing with us, you'd have more than double that. You'd have an additional 500,000 Rand return on your investments. And why is that the case? I think it's because of our investment philosophy. So the idea is to preserve our clients' capital and to grow it in the long term ahead of inflation. We're very, very cognizant of risk, which we define as the permanent loss of capital. So we don't take unnecessary risks with our investors' money. We do tend to invest through the cycle for the long term. And we understand that you need to have patience with some of these things. Time is a powerful force. It tends to compound returns. So, while something may look like it's a relatively marginal return in the short term, over time, it can have a very powerful effect. And I think that this graph shows that quite clearly as well. Okay, so I'm going to hand over to Irfan to talk a little bit about the industry. I know I rushed through that introductory section, so if you have any questions, you're more than welcome to jot them down, and we can talk a bit about it later on.
Hi, thank you, Prabhashan. I hope everyone can hear me. Okay,
Yep,
I'm
we can hear you.
Yes, we can.
Okay, great. Thanks. Prabhashan, can just go on to the next slide. So, I mean, Prabhashan and I thought it would be just a good idea to introduce what asset management is about and how an asset manager works, because I mean, it's a term used very loosely and many people don't really understand what does an asset manager do. So in its most simplest form, an asset manager is basically an allocator of capital. You can think of us as the middleman. What I mean by that is there are people or companies that give us money, and what we do with that money, we invest it on their behalf into other companies or other investments with the intention that that money grows over time and their wealth grows, and then they can retire over a number of years. And just in terms of who are the providers of capitals, I mean, there's two categories. You have institutional investors, which are basically companies, look at Woolworths, UWC, Uber, various companies that are considered institutional investors. And what they basically do is they have a whole lot of employees, and every month employees earn a salary, and a part of that salary goes to the asset manager to invest on the employee's behalf. Then you have also your retail investors, which is myself and each of you. You'll invest in various products through the asset manager with the hope of generating a good return and retiring one day. And like I said, the asset manager, as you can see in the middle, acts as a middleman, and they will give the money to businesses, banks, governments, various other companies, and those companies will use that money for various reasons. Maybe they want to buy a new factory, maybe they want to acquire another company, and that's what they use that money for. And how the asset manager does that is through the financial market. And I'll just explain that a bit more. If Prabhashan can just go on to the next slide, please. So the financial market is a very broad term. There's different categories within the financial market. So you have the money market sector, which is basically shorter term investments, looking at 1 month, 3 month, 1 year, up to 1 year. Those are shorter term investments, lower risk investments, but lower return as well. You have your currency market. That's basically if you're going to be buying, dollars, pounds, any currency. The derivative market is, you might have heard of terms such as options, futures, hedging. That all falls within the derivative market. So very complex market. There's complex instruments in that market. And then the capital market, which is the biggest component of the financial market, and that's where, when you're talking about equities, when you're talking about debt, it all falls within the capital market. And the capital market is broken down into two components. It's the primary market and the secondary market. And the primary market is basically when you read about a company that intends to list, which is referred to as an initial public offering, the first time they're going to appear on the Johannesburg Stock Exchange, what they will do is they will issue shares, and in return they will get cash. And that's done on the primary market. Another instance of where there'll be activity on the primary market is if you have a company that's already listed on the exchange, and now they need to raise more cash. Maybe they want to buy a new factory or acquire a company. They'll again go onto the primary market, issue shares, and they'll get cash in return. The secondary market is different in that this is when shares change hands between asset managers. So, for instance, let's say Coronation has 1 million Shoprite shares. They might sell it to Foord, and so the cash moves from Foord to Coronation, and Coronation will give the shares to Foord. So the key difference between the primary market and the secondary market is that the money doesn't go to the company. In the primary market, the money goes to the company. Secondary market, the money moves between asset managers. Can you go on to the next slide? Then asset classes are basically different types of investment that an asset manager can invest in. So you get your equity, debt, cash, and these are broken down into further categories. Like when you see listed shares on the stock market, you'll see unit trust. Pravashan referred to the balanced fund. That's a unit trust that you can invest in through Foord. You get exchange traded funds, private equity. That's all within the equity band. You get different types of debt investments, and then cash, which is, if you have a fixed deposit with a bank, that falls in a cash investment asset class. And there's various others: real estate, commodities, miscellaneous investments can be like art, jewelry, anything that's not very common. So those are different types of assets that an asset manager has exposure to and can invest in. Next slide, please. So this is a very important slide. So the previous slides just gave you sort of a broader idea of the asset management industry, what an asset manager does, what type of assets they can invest in, how the market works slightly. It's just very brief. This slide is actually important because it actually explains the asset manager, the company itself, the ecosystem. Many people talk about an asset manager and they only think of the analyst or the research team, but there's many components within that. And there are two main functions: is the investment decision-making and execution function and the operation function. And those two go hand in hand. You can't have one without the other. The investment decision-making and execution is the core function within an asset manager, and that's broken down into 3 legs. Your portfolio management, risk management, trading. They also work hand in hand. And just to go into a bit more detail in each leg. So the portfolio management is basically the research team, like Pravashan and I, we sit within the portfolio management leg. We will do research, understand companies, do ratios, try and understand whether the company is worth investing in. Then investment decisions get made off the back of the research we do. And then that filters into a portfolio construction, which is basically where after we made our investment decisions, we decide, okay, these companies we want to buy. The portfolio is constructed in a way such that we decide how much of each asset do we buy. And then along with that, you have the risk management function, and that's actually very important. That goes hand in hand with portfolio management function. And when we invest, we have certain limitations and criteria. For instance, a fund might say you cannot invest more than 30% offshore, or you cannot invest more than 10% in a specific stock. And what will happen is if we go over our limits, this will be flagged by the risk management team, and they will discuss it with the research team, portfolio management team, and then we need to correct any errors that we have made. And then lastly, the trading function. So it's great we decide, okay, we're going to buy 1 million Shoprite shares. That's just a decision that has been made. Someone still needs to go and buy those shares on the market, and that's when the trading team comes, and that's a separate team. So they will actually go onto the market and buy the shares on behalf of the portfolio management team. And then the operational team, they're also very important. They provide us, they'll tell us how much cash we have, whether we can, so that we know if we can buy X amount of shares. They will do recons to say, these are the assets that we hold currently. They'll do performance calculations because every month you need to report, this is what the fund has done. Like Pravashan showed you, if you bought invested in the balanced fund in 2002, what it would be worth. There's someone that actually calculates that performance. And then we have a distribution team, and they are the middleman between the clients and the investment team. So they'll arrange for, presentations. They'll send out marketing information to their team. They'll liaise with the clients a lot more. And then obviously there's regulatory reporting, and then we have our technology and our systems, which all integrate. And within the technology and systems, we have our IT team, which, all of these different departments and divisions, they all flow together and we all work together. So that's just an asset management in a nutshell. The structure can differ company to company, but overall, that's how an asset manager is structured. Thanks, that's it.
Okay, thanks, Irfan. Before I move on, just in terms of this slide, I think it is important. So I'll be talking a bit more about being an equity analyst, because I think that's where the majority of you have an interest, and that is where Irfan and I are in terms of our knowledge and experience. But I think it's very important to realize that the industry is relatively small, especially from an investment team perspective, and it is difficult to get into the industry as well as for the investment team. So I think it's important for all of you to recognize that there's not just one job in this. There are a lot of roles. A lot of them are very interesting. You can have very good careers out of all of these, and a lot of them they will utilize your strengths as best as possible as well. So, I mean, I wouldn't think that any of these roles are anything that to be sniffed at. I mean, risk management as well. It's actually quite an interesting topic. It's growing. It's relevant. There's integration opportunities with IT and systems as well. So you must think holistically about the ecosystem and the opportunities within that. Trading as well. Irfan has some experience on the dealing desk. I think it helps improve his skills and the knowledge of the industry. You're much closer to the market than the investment team as well, because you're seeing what's happening on the day, at that minute, at that time in a share. You get a much better sense of what is happening in the market being on the trading side of things than you would on the portfolio management or investment team side of things. And even within the operational functions as well, there's a lot of interesting things being done there. In terms of performance calculation doesn't sound particularly interesting, but it is quite a dynamic part of the business. Distribution, for example, if you're very much a people person, you still need to understand the industry. You still need to understand investments. You need to understand the macros and what's going on. But being in distribution could play to your strength if you are a people person. So I think it's just important to keep all of these roles in mind when considering your future career. Okay, so as I mentioned, I'm just going to focus a bit more on being an equity analyst. So I've noted some of the key criteria for the role of an equity analyst. That's your areas of responsibility and what you need to do. And I think you can see relatively clearly what that is. Just in terms of conducting thorough fundamental analysis, that's all about understanding the company, the industry, the earnings drivers as well. You need to really, really understand in depth what is going on in a company or industry. And that takes a fair amount of time. You need to analyze market trends, doing things like a SWOT analysis, Porter's 5 forces. Those are useful tools in understanding a business and getting to grips with it. Once you've done that, you can forecast earnings and perform a valuation. You might have come across that from your studies in terms of a very textbook approach to things in finance, conducting DCFs, PE valuations, etc. All of those things are relevant and are used in practice, and you'd be expected to do that as well. Meeting company management, it's important. Company management are custodians of the business, and you're trusting your investors' money with them. So you need to meet them regularly to understand who they are, if you can trust them, if they are good allocators of capital as well. Those are important things that you need to decide, and that's why having that relationship with them is important. From a risk management perspective, scenario and sensitivity analysis, as I mentioned, you need to understand what drives a company, what drives an industry, the long-term trends, and then you need to realize that you'll never get it 100% right. So that's where the importance of scenario and sensitivity analysis is. You need to stress all the variables. You need to consider all the plausible scenarios, and even those that you wouldn't think are. Let me put it this way: they need to be possible, and you might consider them implausible. But as long as they're possible, there is a potential impact on the business, and that, especially these tail risks, which are those that are low probability but high impact. You need to understand those and understand the potential impact in your business. I mean, COVID-19 is a great example of a tail risk. Given pandemics and global connectedness, given that we have seen pandemics and viruses in the past and global connectedness, it was a possibility. And businesses who have high operating leverage, those big fixed cost base, where as soon as their revenue dropped to zero, they faced existential threats. And that's the type of thing that you need to consider as well. How much of operating leverage does a business have? How much debt do they have? If their revenue drops to zero, can they survive? I think COVID-19 has served as a great learning opportunity for a lot of people in the industry as well. And then just in terms of some of your other responsibilities. So, once you've done the work, you need to do a research report and present to the investment team with conviction what your ideas are. And all of that is about making informed recommendations to the portfolio managers about the types of things to buy and sell. So the next couple of slides, I think it's just, I've touched on what the role entails, but I want to highlight some of the benefits of being an equity analyst, because you might think that it's a relatively boring job doing valuations, meeting company management, etc. But actually, there's a lot of learning and growth opportunities in there. So these are the top 10 equity holdings within the Foord Balanced Fund. And I think it's quite an interesting mix of companies. So when I say learning opportunities, you get to engage with the CEOs of some of the biggest companies in South Africa, Africa, and the world. And you can learn about the way that they think about businesses. You can learn about the industries across a broad spectrum of industries, rather. I mean, if you look at that, you've got mining. Tencent, which is embedded in Naspers, is a tech company. Spar is a retailer. Richemont is a luxury goods business. Aspen is pharmaceuticals. Capco is property. Standard Bank banking. Anheuser and British American Tobacco, those are beverage and tobacco companies. I mean, all of those very different earnings drivers and dynamics. And while you may not necessarily have an interest in any of those at the moment, you can learn a significant amount about business from looking at these companies. Okay, I think one of the things that I enjoyed the most was actually the travel opportunities as well. So in the time I've been at Foord, I've traveled to Chicago, I've been to Boston, I've been to London. And a lot of my colleagues have traveled to China, Nigeria, Australia, and a few other places in the world. Our Singapore team travels quite extensively into Southeast Asia. Now, this is not an opportunity that's available to everyone, but it is a possibility. I think the benefit is that you get to learn a lot about different economies, different people, different cultures, and the way that different businesses operate and the way that people think about business and how it's different there as well. So I think it's a good opportunity for you to improve in various ways. And this looks like a little bit of a shameless plug, and a bit of a humble brag. But I mean, I just wanted to point out that when I attended Oxford, I graduated with distinction, and I was in the top 5% of my class. And I would attribute that to the technical skills and the exposure that I had during my first few years at Foord. The technical skills allowed me to compete with some of the smartest people. The all-round skills, the all-round knowledge that I obtained from traveling and speaking to people meant that I could have an informed discussion about anything, any business, macro trend, country, and their economies. I could have a discussion about those and hold my own with some of the most talented people you'll come across. University of Oxford's ranked #1 in the world. And I think it's important to know that this industry and the role of an equity analyst can help you to compete with them. Okay, so what do you need to succeed? How do you break into the industry? I'm going to touch on some of these things here, but I also want to highlight some of the things that are important to remember. These are the common mistakes that people make So firstly, demonstrating a passion for investments. In order to make it, you need to demonstrate that you have a passion for investments. And that's not just saying that, oh, I'm interested in learning more. You need to demonstrate it. So I understand that a lot of people don't have the money to invest themselves, and that's understandable. When I started off, I also didn't. I think but there are other ways to do it. You could build a paper portfolio. There's a lot of free trading accounts. Yahoo Finance has a lot of data. You have lots of resources within your university as well. You can go and create your own mock portfolio for free. You can do your own valuation. You use the textbook knowledge you've learned at UWC and go and show that you can do that. So you can actually go and do a valuation to show and analyze an industry, write a report, see what you can do, and then use that to demonstrate to someone in the industry that you do have an interest and you do have the capabilities to do that. And I think there's other ways as well to demonstrate your passion for investments and to learn. I mean, if you go into LinkedIn, for example, reach out to people in the industry. They're more than welcome. I mean, many of them will be more than happy to talk to you about the asset management industry and about investments because it's something they feel passionate about themselves. And that's a great resource, which is free. Just in terms of the analytical mind that you need to have, I mean, academic requirements are important. You need to have the technical skills, and your academic track record will serve as an indicator of that. However, I mean, no one has a spotless track record. So I think it's important to own your weaknesses. So if you have something where you haven't done well in your academic transcript, you need to have a reason for that. You can explain to people why you didn't achieve as perhaps you could have in a certain subject. And you need to demonstrate that you can overcome that weakness, and there's other attributes that you have that can help you succeed in the industry. I think an interesting thing is to play to your strengths. So you don't necessarily have to have an accounting or finance background to be in asset management. We have people with a geology background, with a law background, etc., and they play to their strengths. So, for example, if you have an engineering degree, there's industries that you could understand better than anyone else, better than someone with an accounting degree. I mean, resources, chemicals, constructions, those are the types of things that you should be looking at and saying you understand it from a much better perspective than other people. I'm not going to touch on the other points on the slide, but just another thing, when you approach a company, so you're going to be engaging with other asset managers and you're going to be applying for various roles with them. This is just some tips about how to approach it. Do your research on the specific company. Why you need to understand why that specific company aligns with you as well. So why are you a good fit for that company? They have something that differentiates them from their competitors. So you need to understand how your personality and skills will complement that. So I can't tell you the number of CVs that I've seen that says that someone is diligent, hardworking, a team player, etc. That is very generic and it won't set you apart. Like I said, understand what the company is. For example, look at what Ford's investment philosophy is. Look at how we think about long-term investments, how we think about risk, and link that to your own personality, your background, what you can bring. And that would set you apart from the other people applying for the jobs.
Bro, if I can just jump in quickly.
Yeah, sure.
So yeah, I mean, like Prab said, I mean, it's not always easy to start a portfolio. Not many of us have money. Like, I mean, myself, I mean, I didn't have a lot of money when I was going to varsity. But there's various tools. I don't know if they still do it, but the JSE had this portfolio challenge. Just have a look if they still have it. It's something nice to take part in, where they actually give you fake money and you try and build a portfolio from that. And the other thing is I mean, many of you should be aware of a company called Easy Equities. And I mean, they allow you to buy fractional shares, and it's so basically you invest according to how much money you have. If you only have 100 Rand, you can invest in 100 Rand, because the important thing is the psychology behind putting your own money at risk versus paper trading is very different. So it's important to just get your feet wet a bit. And the benefit that, like, our generation, or your generation more so than mine have, is that, there's a lot of tools such as blogging that you can use, and you can write up your investment ideas on a blog and then share that, and people can comment and you can learn from that. So those are interesting tools. I mean, use the tools you have at your age to your advantage, and that can set you apart from another person coming and saying, hey, I like investments and I'm diligent. Like Pravashan said, you've got something very different that you can show that sets you apart. That's the key element. You need to find a way to stand out amongst the crowd. Thanks.
And just to build a bit on what Irfan was saying, when you do construct your paper portfolio, and be willing to discuss it as well. It will come up in an interview question. So if you said, yeah, I've opened up an easy equities account, okay, that's fine. But what have you done with it? So even if it's a paper one, if it's a mock one, the demo model, etc., talk about the investments you have. Talk about how you've approached them, why you've chosen those companies. Be prepared to answer a little bit of technical questions on it, why you chose it, valuation, risk management, diversification, etc. Those are things that you've learned at university, but you've never actually seen or done in practice. So this is your opportunity to actually show that you've tried to, use the knowledge that you've learned at university. And it demonstrates the passion for investments and your aptitude as well. Okay, so what are we doing at Foord in terms of trying to have to create opportunities for people? So the industry hasn't generally done this particularly well, and so for the first time last year, we hosted our VAC program for students. We took 4 students in, 1 from UWC, 2 from UCT, and 1 from the University of Pretoria. So what was the purpose of the program? So from Foord's perspective, we want to invest for the future. We want to increase our brand awareness. So there's 2 elements to that. One is to try and get our name out there, and the other is to try and attract talent, people with different ideas, people from a different age group, etc., that could potentially add to the team as well. So the idea was, it was a learning experience for us, and it was also potentially going to be a learning experience for other people as well. So as part of that, we tried to raise awareness about the industry. So we did presentations at UCT, UWC as well. Part of the program was also talking about the industry. And this is not something the industry has done particularly well. There's not enough people of color in asset management. Our thinking is we're long-term investors in our funds. We should also be long-term investors in terms of people and the country as well. And from a student perspective, it was all about learning about asset management, but also gaining practical experience. And I'll touch a bit on the structure of the program in the next slide. But ultimately, it was also about building relationships for people in the industry. People, the students, the 4 students that we had, got a chance to speak to portfolio managers, speak to the dealers, speak to the people in distribution as well. And that helps them to at least know people that could at least advise them and potentially put them in contact with others in the industry as well. So just briefly on the structure of the program, as I mentioned, we touched on an introduction to asset management. It was an expanded version of what Irfan did in terms of talking about the various elements, going into a bit more detail. We had people from the various businesses the operational units and business units coming and talking to the students. We then went a little bit more Foord specific. We talked about our investment philosophy and expanded on that. I didn't spend too much time on it, but it is important because it's about how we see investments, what our approach is as well. And then building on that, we took a top-down approach. So we taught students about how to look at the macroeconomics, how to look at the industry dynamics, think about long-term trends, and decide which industries and countries you want to be in. And then we looked at conducting a bottom-up analysis. And this is a lot of the stuff that you learn as well about valuations and financial statement analysis and those types of things. But there's a lot of practical elements that come into it that you don't necessarily see. So we went through real examples of what we do. And I think it helps crystallize some of those textbook theories and knowledge that you have. And eventually the idea was that the students created an investment case on a stock. So they had actual simulated investment case. So they received financial information. They had to go and do a management meeting with one of our teams acting as the CEO of the company. They had to go and build a model. They presented their ideas to the deputy CIO, and ultimately he chose the best investment case out of the two that were presented. So that's generally the structure and the idea of the program, to give you a sense of how things are and how it works. And we're looking to do this again next year, given how disruptive COVID has been. The aim is potentially to be in February next year, and we will communicate that to ABSIP as well as we develop those plans. So I hope it wasn't too boring, and I hope we didn't take up too much time as well. We may have rushed certain things, so please let us know what questions you have. We're more than happy to help out where we can. Thanks.
Thank you, Pravashan and Ifran. So with me, I have quite a few questions actually, but my first question would be the fact that in your presentation you mentioned the fact that you have long-term investing in the people. So my question would then be, what is the conversation in the industry, or rather in Foord Asset Management in particular, on topics like previously disadvantaged people and women in the industry? What have you guys been doing about this? Because it is a factor that is out there, and we are trying to see which companies have been actively trying to combat the matter.
Okay, thanks. It's a good question and a very relevant question as well. So out of the 4 students we selected, 2 of them were female and all 4 of them are of color as well. So it is very much front of mind for us as well. As I mentioned, and I didn't really touch on it too much, but the business is privately owned, and it is important to ensure that the community involvement is there. So what's happened is that they've been working on a trust that will focus on women of color in the communities, and that is, they will be the ultimate beneficiary of the growth and of the business as well. So that's something else we're doing. From an investment team perspective, what we're looking at doing is, and this is within my responsibilities now as the head of equity, is to put in structure in place to bridge that gap from those people who have graduated to becoming analysts. I mean, the VAC program is very much a 1-week program, and that gives you a little bit of sense of the industry and how things are done, but it's not enough for you to demonstrate your abilities and to properly train anyone. And what we're looking at doing is expanding that program to potentially get some people in for 6 months, to give them tasks which are properly value adding and contribute to the team, and give them the opportunity to prove themselves. So we'll have a bit more of formal training, which we haven't done particularly well in the past, and we'll set people up to give them the opportunity to prove themselves. And again, the focus will be very much on women and people of color as well.
Yes, can I also just add in with the questions? Can I share my screen also, because I think this is something that I might need some evidence. Let me just try. Okay, is my screen visible?
Yes, it is. Yep.
Yes, because I was actually having a discussion with one of my team members from UWC, and the topic was about the educational system and the role it plays towards the big player asset management firms. And this was a study done by Business Tech. Obviously, it's like some form of a tech online firm, and it was working with the wealth management division of Sanlam that plays their part. And it was established that majority of asset managers are often selected and are graduates from UCT, there are graduates from Wits and there are graduates from Stellenbosch, I think. So my question is, in terms of studying investments as a core, what is the distinguished factors as students from previously disadvantaged institutions? Like UWC is a previously disadvantaged institution. You look at the Fortes. I don't even, for instance, you see this is a breakdown of the undergraduate university attended from asset managers. I think it was a sample size of like 200. So I think it's pretty much significant. So for instance, it says here for almost 46% of that sample of asset managers went to UCT. So does UCT have an advanced investments program? How do people from, for instance, from UCT, from UWC, Forte, UKZN distinguish themselves in order for you guys maybe to just select them? Because for instance, I'm sure that I'm going to make the case that maybe you select 2 people for an interview. One comes from Forte, let me say 3. Another one comes from UCT. Another one comes from Wits, and the guy doing the recruitment got his degree from UCT, and he already has some kind of connection with the graduate of UCT, assuming this relationship stays the same. So how can we distinguish ourselves from previously disadvantaged institutions? Because here are the stats. I mean, the guys who dominate the asset management industry as a whole are often coming from UCT. Do they have some form of special investments program you guys like?
No. So this is actually a very relevant question, and thanks for asking it. I actually did want to touch on it, and I forgot to do so. So
Yeah.
Thank you for that. I think there's a couple of dynamics to be aware of here, right? Is that, okay, firstly, the asset management industry is largely based in Cape Town, and so recruitment tends to be a little bit more skewed towards Cape Town based universities as well. Again, the idea that people from UCT use the alumni network to hire from UCT, it is possible, but I don't think that's necessarily the case. I think what's really relevant here is, and it is a sad fact, that UCT students tend to come from wealthier backgrounds, right? And what that means is that they have been lucky enough to have exposure to other areas of asset management, which most people don't have an opportunity to look at. So if you're from UCT, generally, you middle income to affluent background, your parents have investments, or they know someone in investments, they know someone in asset management. So you get the links and the opportunities from there, but you as an individual as well, as a student, have more opportunity to get that experience, to actually do investing yourself, to learn from people who are in the industry. And I think that that's what benefits them. And that's a legacy of the way things are, I'm sorry, of the way things were in the past. And I think in terms of addressing that, it is very important. And that's why I touched on some of the things I did when I was talking about how to set yourself apart going into it, particularly when it comes to demonstrating your passion for investments. The idea is that you need to be able to show that you have that interest and that drive. But the problem is, it was difficult for people to demonstrate that without having money to actually invest themselves. And so that's why Irfan and I was talking about, look at Easy Equities. Standard Bank share trading platform, I think, is free for a demo model as well. Play around with those. Use your textbook knowledge. Try and do an investment case yourself. So even if you don't have the money to invest, you can show that you've tried to, and that you have the abilities to do that. And I think that is important. Not that you actually had the money to invest, but that you have the drive, the desire to do it, and the ability to do it. So I think that that's something that would stand you in good stead. I hope that helps.
Okay, yeah. I can. I get it. Is someone?
Yeah, if I can just, and I mean, it's a lot what Prav said earlier. I mean, you need to stand apart from the other individuals. It's a very competitive industry, I mean, you need to be reading books. You know, a question that often is asked, what investment books have you read? And the way the world is now, it's so much easier to get access to books, to do paper trading, to do actual trading, and all of those things that makes it easier for you to stand apart. So, I mean, it's very much on you as an individual have to do that. And like Prav also said, you know, go onto LinkedIn, get in touch with people, build your network so that when the time comes that you're actually in the market looking for a job, you can leverage off those networks. So, yeah, it's very much about yourself. And that's what you need to do. Many people want to put accountability on others, but at the end of the day, you are in charge of your own future. I mean, I come from a background, I didn't have wealthy parents. I had to get bursaries to go to university, etc. But I had to persevere and I had to show, you know, I had a paper portfolio. I took part in the JSE challenge, and all of those things was to my benefit that helped me get into the industry. So yeah, that's my.
Yeah, and so I think before we head into the written comments in the chat, I think the last one is basically, what do you think power players in the asset management industry can influence our education systems in order for us to go towards investing? And I mean, I only started trading on easy equities, as you say, since March this year. And I literally never knew about it. I studied business studies in high school. I've been doing business in UWC. I've had some investment modules, not majoring in them though, but I did have them. And none of them literally just, all we get bombarded with is the theory, the capital structures, the whatevers of a firm, margins. So how do you guys in your positions try to influence society, even in disadvantaged areas, towards young kids? How do you get the young, because you know with investing, time is money literally. If you start now in your 23, you're going to have greater returns in your retirement than someone who started at age 40. So I think the key is just to make sure that youngsters, especially the ones studying commerce, are actually equipped and they know about the benefits. So have you guys been maybe doing any of educational programs towards high schools, universities, and if so, are you going to have these programs coming up?
Yep. So yeah, actually, what we've started doing is we're trying to go across the spectrum. So we've actually even created a book for small children, which acts as a fable, where a squirrel starts, saving nuts, etc., and to demonstrate that idea of saving and investment for the future, which would be winter in that case as well. And those books were distributed for free across various numbers of schools, etc. So I think from even from a grassroots level, we're trying to promote a culture of saving and investment. The high school level is a little bit more difficult. So our founder Dave Foord, quite a while ago, actually tried to get together with some of the education department, with principals, etc. And unfortunately, what he came across was a lot of bureaucracy, red tape, and vested interest, which prevented him from rolling anything out further. So what we've done subsequently is we've focused a lot on community work, not necessarily investment related. And I think that is something that's perhaps a missed opportunity. And that's something we're trying to address now. The reason we're focusing more on university students, hence our involvement today, is because some of the concepts involved in asset management are not necessarily easy to understand when you're in high school. Is there a way we could do it? Potentially. But as students in university, you guys are more on the cusp of these types of things. So it's at this stage we're focusing more on you and your future, because you're more likely to go into the industry sooner before moving to the high school students and those sorts of things. So I think that's generally how we've approached it, and that's why I'm saying our VAC program and our the way we're looking at graduate recruitment, that's our focus area at the moment.
Okay, Sean, I also have another question. Sorry, I will to just interject. So what I want to know is that may you briefly outline the growing opportunities into the impact investing and alternative investment, and what qualification one needs from varsity going into those spaces. Because I feel like with me, for example, I'm a BCom student majoring in finance and financial accounting, but I only know of so much within the industry that I'm not quite sure of those options that are in front of me now. I want to know what is beyond. I want to know what I need to get beyond. And so hence I'm asking what growing opportunities are there, and what qualifications do I need?
Okay. So impact investing is quite an important topic, and it's very underdeveloped, and not just in South Africa but globally as well. And I think it's important to differentiate between impact investing and ESG investing. ESG investing, particularly in Europe and the US, are a lot further along. Impact investing is difficult because you need to measure impact, social impact, and that is where the difficulty comes in. So with impact investing, the idea is that you sacrifice a bit of financial return to have a social impact. But for example, when I was at Oxford, we did a due diligence on a Kenyan startup, that of edtech startup, and the problem they were having was that how do you measure your impact when you're working with primary school students, right? Because ultimately, you'd only be able to see that impact when they get to a job, because you measure them relative to other primary school students. There's a lot of other factors there that need to be taken into account. But even when they finish primary school, they go into high school. And have you put them in a better position to go into high school? Possibly, but you need to take a certain number of years to prove that. Then you need to take a certain number of years to prove that they get into the best universities, and then ultimately into the best jobs. So measuring impact is very difficult, and I think that's why the industry is not moving as quickly as it could. And there's no answer to that. So if you're thinking about going into the industry, having some ideas on that element would actually stand you in good stead as well. And I think that's something that is a very interesting topic to develop. In terms of how asset managers here are approaching it, again, the focus is very much on ESG investing still at this stage. And I think it's important to remember that a lot of the impact investing tends to be in unlisted entities. So a lot of our mandates call for listed investing. And the idea there is that listed companies are less risky than unlisted. That may or may not be correct. It generally tends to be the case, though. So that's the reason that regulation requires us to invest in those sorts of things for retirement funds. The way to reach impact investing is through potentially bonds. So some of the banks have been issuing bonds and then allocating it to impact and ESG investing. But it is still a very much a nascent field. So at this stage, I think it's leaning more towards ESG, where you could be involved, rather than impact investing. Impact investing, it's more likely you'll be involved with the underlying company than an impact investor at this stage, because it is quite small.
All right, and then what are the qualifications that you need? So
sorry.
Yeah.
Yep. Yeah. So I think it kind of goes to the comment I made about play to your strengths as well. So if you have an accounting finance background, it's still a business decision that needs to be made when you do impact investing, right? So the business needs to be viable and the investment needs to generate a return. Maybe not the highest return, but an adequate return to compensate for the risk and things like inflation as well. So if you think about it, with your background, what interests you in the social impact space? So if it is education, if it is financial inclusion, then you could get involved in terms of the underlying company by joining those companies and contributing on the finance side of things. Or if you go into an impact investing asset manager, which like I said, it's very difficult, it's still nascent. You could use your skills to help do the due diligence on these companies, to look at the financial side, to look at the risk return. So I would say that, from your perspective, that would be the way to do it. If you have some of the engineering background, they could have a different perspective. They could be involved in a different way in terms of measuring the impact, in terms of actually trying to determine what the impact is going to be. So I think those the 2 points I'd make is that play to your strengths, and also, sorry, play to your strengths and see what is of interest to you, and then use that. Don't let your background necessarily constrain you from doing anything.
All right, let us move into the comment section. Tapi Wanashe asks, where do new graduates fit in your team and the industry, and what career path should they expect?
Okay, so I touched on it very briefly. So traditionally, we've hired people with a bit of work experience as well, because we didn't have the structures in place to do formal training. That's something I'm looking to address, to ensure, as I mentioned, that we get people in on at least a 6-month contract, and train them properly and give them the opportunities to prove their worth. The industry, the various asset managers have different types of programs that take graduates in. It is highly competitive as well, and it is quite small. So that's why I provided some advice in terms of how to differentiate yourself from some of the others. I think I forgot to mention it, but ASISA, for example, also facilitate internship programs at the asset managers, which are also potential opportunities for you. And in terms of career path, I think it's very much the case that you tend to go from being a junior analyst. You have the technical skills, but learning more about how to implement it, to becoming a more senior analyst, where you have a significant amount of responsibility in terms of the sectors you cover and the recommendations you make to the portfolio managers on complex things, banks, insurers, something like Tencent, multi-jurisdiction companies, corporate action, etc., that are important and complex things that need to be considered in terms of portfolio construction. And then ultimately, the idea is to become a portfolio manager, which is you're then responsible for the underlying investment of the funds. You determine which assets investors' money go into. You are responsible for people's money, and you need to be aware of the risks, the correlations, the long-term trends that could affect it. And that is a lot of responsibility for one to take, but that should be your ultimate aim in the asset management industry.
All right, and the second one from Sunday is Foord, a CFA accredited firm. And he's currently in his final year and looking to enroll for a CFA level 1 in 2021. How does the external certifications influence your decisions? It's also another interesting one. And are there any graduate programs the company currently has available, maybe listed on your website or?
Yep. So I touched on the last part of that question already, so I'm not going to repeat it. I'm not sure what's meant by a CFA accredited firm. So the CFA accreditation, the charter is awarded by the CFA Institute, which is based in Charlottesville in the US. The CFA program, I think it's important because it provides a validation of your ability, right? Not just within a South African context, but in a global context. The exams are difficult. Level 2 is technically very, very difficult, and level 3 it's a written component, but it requires some high-level thinking as well. So it is intense and it is expensive, and I think it's important to be aware of that. But what it does do is that if you have that accreditation, people will understand that you have, at a minimum level, the technical competence to do that, and you could do that anywhere in the world. And I think that's why the CFA qualification or the CFA charter is something that's important to have. Now, particularly if you're going to be in the industry, that's something that you should be going for. If you're a chartered accountant, you could kind of do various things across various industries. the CFA charter is more relevant for asset management than it would be for anywhere else. And our approach to it is, it's not a barrier to entry into the industry, and it's not a barrier to entry into Foord as well. It does, as I said, it does help to show you have the technical competence to do the role. A lot of our team are CFAs, also for people who are from non-finance backgrounds. So if they didn't do BCom accounting or BCom finance, if they did something like engineering, law, some of the humanities, etc., going into doing your CFA helps you to get the basics down for asset management that you might have missed, because it will cover finance, accounting, derivatives, all of those sorts of things, economics as well. And I think that's how it helps people from a non-finance accounting background get up to speed.
If I can just jump in, so most people generally have CFA level 1 when they start working, and then they generally get their CFA level 2 and 3, during their work, while they're working. And most asset managers are willing to pay for those fees, because it shows that you are definitely interested in the industry, because like Pravashan said, it's quite expensive. So it's always good to have that level 1 behind you, and then you can move forward. But it is difficult, and it's also, it tests you from a time management and a mental perspective. But it's a very good accreditation to get behind your name.
All right. Yeah, I think from my side, I received what I needed to receive. So we have also recorded this, so we can actually just share it to our membership who just couldn't make it to the current video. And I'll also maybe create a short link that I can forward to other chapters, such as UCTs, the bits, to just see the nitty-gritties we discussed. So yeah, Kolofelo, back to you if you have anything to add.
Okay. First of all, thank you to Pravashan and Ifran for the session. It was very much informative, I believe, to a whole lot of us who were slightly clueless about most of the stuff that you spoke about today. It is very much appreciated that you took time out of your busy schedules to educate us more on the topic and share with us about Foord. Hopefully, you'll be having that program or grad programs in future, and will contact us about the available opportunities, and hopefully we'll be your probable candidates. Seeing that we also just highlighted the fact that as UWC, we feel a little bit left behind when everybody starts moving, because everybody takes students from like the top 5 varsities within the country, and then we are a little bit left behind. Not so sure about where we are right now, because when I started varsity, we were by number 5, and I think we lagged a little behind, but I'm not really sure about the stats there. So if that's it, or that's all the questions that everybody has, I had more questions, but we are running a little bit way aboard time, so it's fine. Is it okay if we email you, Pravashan or Ifran, about questions that we have later on? What can we do to be in contact with you with regards to any other questions that we have or specifications?
Yeah, we're always happy to help out. And I mean, as you mentioned, UWC, we would like to see more from the university as well. Our VAC program, we're looking to expand the number of people. So, we're hoping for some good submissions from you guys. In the interim, yeah, more than welcome to send me some mails. You have to forgive me if I take a little bit of time to respond as well, because it is, we are very busy, but we are really happy to help out and provide guidance as well, because you guys really are the future of the industry and of Foord as well. So we're more than happy to engage with you whenever needed.
All right, then. I believe that is it. Thank you very much for gracing us with your presence. Thank you to everybody else as well for gracing us with your presence and being a part of today's seminar. Thank you, webinar, now that we see it. Yes, thank you very much. And
before everyone signs out, can we just have a quick cheese moment?
Oh, yes.
Yeah.
Put on your best smiles, put on your cameras. It's okay if This is a mask-free space, so
One,
trust.
2, 3. All right, that's done.
Right.
All right, thank you very much.
Yep. Thanks, guys. Take care.
Thank you very much. Bye.
Bye. Bye.
Should we leave, Abu? Shall we leave?